Hey everyone, I'm Jeremy Szafron. Welcome back. Well, Bitcoin is knocking on the door of six figures yet again here as U.S. banking regulators just reversed key crypto restrictions. And over the weekend, I don't know if you've heard about it, but Warren Buffett shook Wall Street with two bombshells at the Berkshire Hathaway's annual meeting over in Nebraska. Now, the Oracle of Omaha announced his plans to step down, and he warned that governments always try to debase their currencies, yet he still refuses to believe in gold or Bitcoin. Meanwhile, Jack Mallers is launching a company that wants to flip the fiat system on its head, measuring shareholder value not in dollars, but in Bitcoin. We're joined by a familiar face, Jack Mallers, founder and CEO of Strike, the Bitcoin payment platform, and now CEO of 21 Capital. Congrats. Good to see you, my friend. Welcome back to Kitco.
Jeremy, my man, thank you for the intro, brother. How are you?
I'm good. I'm good. We're kind of coming against this big backdrop of macro news. I was saying to your team before coming, it's a wild time in the markets, particularly for Bitcoin. I think it's up about 13% over 1 month. But before we get into that, Jack, I got to bring up the Warren Buffett's moment here. He had this moment from past weekend where his final Berkshire Hathaway shareholder meeting as CEO, and he drew record crowds in Omaha, over 20,000 people. I was flying around the country this weekend. There was a lot of people going to Nebraska. I wanted to bring your attention to this one quote that he said, and we'll play the clip too, but he said, we wouldn't want to be owning anything that we thought was in a currency that was really going to hell. That's the big thing we worry about with the U.S. currency. Take a listen.
We wouldn't want to be owning anything that we thought was in a currency that was really going to hell. And that's the big thing we worry about with the United States currency. I mean, the tendency of a government to want to debase its currency over time there's no system that beats that.
No system that beats it. It's an incredible admission from a man whose firm is sitting on a record $300 billion in cash, and yet Buffett has spent decades dismissing the very two assets that were built, or at least marketed, as defenses against that very threat. He's called gold neither useful nor procreative, and Bitcoin, he said, even if you gave him all the Bitcoin in the world for $25, he wouldn't take it, famously referring to it as the rat poison squared. So here's a question, my friend. Do you think someone as smart, data-driven, and widely followed as Warren Buffett, who openly admits the debasement we're talking about here is inevitable, can confidently dismiss Bitcoin or gold as solutions? I mean, what are we missing here?
Well, I actually think that those two quotes of Warren's dismissing gold and Bitcoin are old. I think this most recent quote and the timing of it is fascinating because obviously Warren's a great investor. And what we're living through, in my opinion, is the unwind from the economic alignment put in place after the world wars. This is a dollar world reserve currency world where the U.S. structurally operates in a deficit. Countries like China operate in a surplus, and we're reordering capital flows. And the U.S. and China are trying to come to a new economic alignment. And in the process of that, markets like the bond market have been getting crushed. And I think Warren owns over, is it $300 billion worth of treasuries? And so he's one of the largest holders of the U.S. debt in the marketplace. And so for him to have that self-admission, seeing the bond market getting crushed and questioning the reordering of capital alignment and capital flows globally says to me the macro environment that we're in for him to even make that acknowledgement. And I'd be curious, the two most fixed supply credible assets in the world, gold and Bitcoin, if he has a change in tune, because those quotes to me are old. And I also consider him a great investor, but an older investor, again, in a fiat world that lived through this world reserve currency era where, I'd be curious his opinion again. I don't want to go at Mr. Buffett and discredit him with old quotes. That wouldn't be fair.
Well, then I'm curious. I mean, could you see Berkshire maybe investing in gold or Bitcoin using that cash? They're sitting on $330 billion.
Yes, absolutely.
Yeah.
Listen, I think the treasuries market was the world reserve asset of the world. As countries globally take their excess cash flows from global trade, their surplus, and they invest it into dollar-based assets. To be the world reserve currency, you got to have an asset backing it that people want. That was traditionally U.S. debt and treasuries. That slowly became maybe the Mag 7 and U.S. tech stocks. And now we're seeing the market even dismiss those and find something like gold or Bitcoin attractive. So in my opinion, money is our time and energy in an abstracted form. We all contribute to this world, and we store it in money. Money is a technology that's supposed to save and then allow you to later exchange your efforts for things you need in your life. I think gold and Bitcoin more particularly, holds the properties to fulfill that promise within the marketplace. And I think there's going to be a lot of new capital flow that finds the asset class. There's no doubt about that, Berkshire included.
Yeah, no, it seems like it's already happening with the sovereigns, but we'll get into that in a second. Let's continue with Bitcoin's narrative. I mean, it's bounced 30% off its lows, is now brushing up against 100,000 again. Break down the top drivers here, both positive and negative for us, Jack, if you could.
I think it's very simply a fiat liquidity story. My mental model for Bitcoin is Bitcoin equals technology plus fiat liquidity. Technology in the thesis and the idea that we're going to continue as humans build advancements in technology, things like cryptography, distributed networks are going to be positive signs for the world, plus fiat liquidity. Plus, the more currency they print, the more they weaken fiat currency. I think Bitcoin's the most sensitive asset to that. It's the most fixed asset in the history of our species. It's the most accessible smoke alarm to fiat liquidity. I think it's the direct response to money printing. I think Bitcoin smells it. And what we've seen the bond market was falling apart, dollar down, stocks down. And we saw Besant and financial leaders come out and say, we will print the money. We're going to print the money. And I think Bitcoin reacted the most to that because it's the most sensitive. So I think in a world of uncertainty, what monetary regime are we entering now? Because it seems like the old one is dead. Bitcoin is most sensitive and most reactory to these fiat liquidity changes. And that's what I think was the 30% upswing recently, is financial authorities coming out and saying, we recognize the volatility, we recognize the chaos, we recognize the underperformance in what was supposed to be a safe haven. We're going to come print the money. We're going to come to value the dollar and support markets. And Bitcoin ran from there.
Yeah, speaking of printing money, the Fed, a lot of people are watching them right now. Obviously, we have upcoming meeting now signaling at least 2 potential rate cuts this year. Would that be a bullish signal for Bitcoin, or could it be a warning that growth is weakening?
I don't think the Fed matters as much as people give them credit anymore. Yeah. I think it's all about the Treasury. It's all about the Treasury. It's all about Scott Bessent. I think for people to understand the macro environment we're in today, we do have to go all the way back to World War II. We do have to understand what the alignment was back then and why, where we are today, and how the US is going to afford to run this country with such massive amounts of debt, such massive amounts of deficits. The Fed doesn't matter. This idea of post-2008, where QE is the word everyone is looking for. This doesn't matter. What matters is the U.S. is structurally short bond volatility. That's what I think we should really be talking about. Who's the marginal lender to the United States of America? And as soon as the MOVE index got above 140, and as soon as the bond market got volatile, every single market fell apart, and they stepped in and they said, we're here to bail it out if we need to bail it out. And that's coming from Scott Bessent. That's about financing the deficits. That's an extension of what Janet Yellen was doing in the last administration. That's where the liquidity comes from, in my opinion, not the Fed. Bitcoin went from 15,000 to 100,000 while Jerome Powell hiked rates. It does not matter what the Fed is doing. I think this QE is old news. Main Street knows what QE is. They can't tip off Main Street that way. I think the liquidity comes from the Treasury, and that's who we need to watch right now is Scott Bessent.
Interesting. Okay. Well, people are. I was watching them just this morning. We're talking at the Milken Institute. I want to ask you about gold. I just have to, because we're now above that $3,500 mark. And I'm curious, is capital flowing from Bitcoin into gold, or are both assets rallying together in this macro environment?
I think they're both rallying together. I think capital is flowing into gold from trade surpluses. So I've hinted at this post-World War II alignment. Let me just, if you don't mind, storytell for a second.
Please.
So really what happens at a decimating world war, the US was the strongest economy. They owned the most gold. They had the best manufacturing base at the time. And so what they did is they exported their strength by taking on the world reserve currency status. What they told the world is, listen, let's make the dollar the world reserve currency. We got the most gold. We have the strongest economy. We'll export our strength to you through the dollar. You all produce stuff. So Russia, you're the best natural commodities producer. China, you're going to build on top of manufacturing. Germany and Japan, you're going to see lots of growth. So the US structurally operated in a deficit. We didn't produce. We let everyone else produce. We exported the dollar. We imported goods and debt, right? So we imported food, energy, oil, manufactured good, cars, and we exported the dollar. Now, that's not a very sustainable practice, printing pieces of paper for real stuff. That was a reaction to a world war. But like any other empire, in my opinion, the US has gotten greedy. Those deficits have compounded over decades, over decades, over decades. The debt has compounded over decades, over decades, over decades. Now you live in a world where China is operating in a $1 trillion plus annual surplus with trade, global trade, and the US has over $35 trillion worth of debt. And my opinion is we're just unwinding from this very irrational economic behavior that was never supposed to scale in the first place. We're unwinding from the world wars, where the new US policy published on February 21st was China, take your money and go home. China's taking their $1 billion trade surplus, Jeremy, and you cannot invest it locally. You cannot strengthen the local Chinese currency. It weakens your export market. So you have to invest it outside. So the reason US exceptionalism, US tech stocks only go up is they were getting a lot of the capital flows from global trade surplus. Mm-hmm. China's taking their $1 trillion. They're plowing it into US real estate. They're plowing it into US tech stocks. Trump's new policy is you're creating a wealth gap in this country. You're destroying the poor. You're creating too much asset inflation. We don't want your money here anymore. Take your money, go home. If you're China, okay, Treasuries is a bad place to put capital. Mag 7 is a bad place, and now we're not even allowed to put capital in it. What does the world do with the time and energy, the value, the trade, the surplus? Where do you put it? Where's an asset that is physically protective, that can't be inflated, that can't be controlled? Gold and Bitcoin. So you're seeing capital flows being reorganized, being reordered. The US saying, we don't want to be the world reserve currency anymore. It puts us structurally in a deficit. And the last thing I'll say is on the US's structurally short bond volatility, who in their right mind, Jeremy, would lend money to someone who can't control how they spend? It is already in $36 trillion worth of debt. That's the United States. They run an unprofitable business, so they can't sustain themselves. They need a lender to finance their ability to survive. Who in their right mind is lending? And guess what? It's not China anymore. It's not Russia anymore. It's none of our global trade partners. It's hedge funds in the Cayman Islands, and it's stablecoins. If you look at the recent data, the biggest buyer of US debt has been the Cayman Islands, not because of the country, but it's because of hedge funds domiciled there. And so the reason the US can't afford volatility is volatility forces banks to have these hedge funds post more collateral for the basis trade they're doing on immense amount of leverage buying all these treasuries. And so as soon as the bond market got volatile, that's why you saw all the financial authorities step in and say, we're here to protect it, because they almost blew out the only person that's price insensitive and willing to buy this piece of crap debt. So where I see the market today is the Treasury. Bessent goes on Bloomberg immediately. I'm going to organize stock buybacks. Jamie Dimon comes out and says, let's please change the supplemental leverage ratio so banks, US banks, can buy unlimited amounts of treasuries, right? You're seeing support for the Treasury market. We're going to kill volatility. We're going to print the money, and capital flows of our trade partners get it out of the US so we can build a middle class again. We can build a manufacturing class again. And China and Russia, all these countries with all these large trade surpluses, are going to have to find a place to store and protect their capital. And I think gold and Bitcoin are going to be the winners in this decade.
Jack, you brought up Bessent before. I mean, of course, the Treasury Secretary. What can Scott Bessent really do? I mean, what's his secret weapon here? What can he do to offer an escape hatch in this environment?
So the buyers of U.S. debt, those that are actually lending to the United States to allow them to finance themselves out of this hole, are hedge funds. And what these hedge funds are doing is what's called a basis trade. And the way that this works is they're arbitraging US debt instruments, but they're doing it on an incredible amount of leverage. You know, imagine a hedge fund making just a millimeter worth of money, but if you can lever that times 1,000,000, you can actually make a lot of money. So leverage is the game. Leverage does not work in a very volatile market, because that person lending you the leverage is going to ask for more and more collateral. The hedge funds don't have the collateral. They close their positions. The bond market gets absolutely obliterated. That's what we saw post-Liberation Day. And so what Jamie Dimon, what Scott Bessent have been advocating for in the media is give this market more leverage. Something like the SLR, the supplemental leverage ratio, that was introduced after 2008, the great financial crisis, because what the new regulation said is banks can't just infinitely leverage their balance sheets to buy US debt. You need to post some sense of equity, some sense of capital. It has to be expensive for you to lever yourself that much. It applied some physical constraints to the market so that it couldn't get so irrational. And what these financial leaders are asking for is, let's remove those rules, because we're going to need a lot of leverage, and we're going to have to support a lot of these market participants like hedge funds that are running an arbitrage trade. They're not necessarily speculating on US debt. The US wants buyers of these instruments that don't care about the price. They're just arbitraging. And so when Scott Bessent, and I encourage everyone to go look at his interview where he talks about Treasury buybacks. I encourage everyone to go where Jamie Dimon says, remove the SLR. This would allow banks to infinitely buy US debt, unlimited amounts of leverage. It's going to allow these hedge funds to use unlimited amounts of leverage. And so that's what you're going to get is you're going to get an insanely levered, which it already is, US financial system and buyers like US banks and hedge funds in the Cayman Islands that are running either arbitrage trades. I mean, these guys don't care about the fact that the United States is going to have real rates negative. Inflation is going to run hotter than the yields. And so that's my opinion. And they can't sustain any volatility. So they're going to have to print the money. And that's all very, very inflationary. And all this new capital is going to have to find something that can actually protect it. And I believe Bitcoin's the ultimate winner because it's the hardest thing you can own. Hard as in it's the hardest to make more of it. It's the scarcest thing you can own. And that's who I think is the winner in a world where fiat is so increasingly abundant.
Yeah, interesting. And I mean, we got these reintroducing of the tariffs, the dollars pulled back, obviously Bitcoin continuing to do really well. I guess what you're saying is that we're seeing the early signs of Bitcoin as a macro hedge against U.S. fiscal policy.
Yes, 100%. I think Bitcoin, again, Bitcoin equals technology plus fiat liquidity. And that fiat liquidity part is so important. Who's the best expression of currency debasement? What instrument is going to react and punish more dollars printed? If this market is full of levered hedge funds and banks begging for leverage rule changes, and it's going to be more credit, more liquidity, more debasement, what do I want to own? And in my opinion, Bitcoin is the one that increasingly is checking that box. And by the way, gold failed us already. I mean, the biggest question for gold investors is this time different? Because the problem is all of the gold is sitting in Western nation state vaults. And that's what screwed us last time. Is that in order for gold to actually be a global reserve currency, it has to be concentrated with government. And at the end of the day, when government wants to act not in your best interest, you're screwed. And that was the divorce of the gold standard and that Nixon shock. And so I think Bitcoin checks all boxes. It solves the problem that gold seemingly couldn't. And it's increasingly becoming the best expression of the biggest problem today, which is how are we going to enter a new monetary regime? How is the US going to distance itself from the world reserve currency? How is it going to deal with the structural deficits it's built up over the last 100 years since the world wars? And I think Bitcoin's won that bid. It's been the best performing asset. It will continue to be because it physically holds those properties. It's the scarcest thing you can own and hold yourself.
Yeah, good segue for me to go too, because we got to talk about 21 Capital. I mean, let's start with the big picture. You're calling it a pure play Bitcoin operating company. It's a step beyond holding Bitcoin on the balance sheet like MicroStrategy. Walk us through what that really means and what gap you're trying to fill in the capital markets here.
Yeah, so I co-founded the business with Tether. We've been in Bitcoin for well over a decade. And I think we were so inspired by what Michael Saylor and MicroStrategy had built. But over the last few years, I think we identified what we consider a massive opportunity, which is bringing blue chip credibility with startup upside. We think we're big enough to win, small enough to grow. And the opportunity with more words to us is build a public markets, a capital markets vehicle that has the credibility to raise the most money, to acquire the most Bitcoin, to be the most accretive in Bitcoin per share terms, but also technology builders that founded, that are on the board, that are on the leadership team, that can actually extend the opportunity beyond just buying Bitcoin, building technology on top of this asset. We hadn't seen anybody do that yet. And so we're not a small cap business, a mid cap business that's pivoting from a failed operating company, pivoting to a new opportunity. We're not changing our name. We are founded and designed to be the winner of, we want to be the best way for capital markets to participate in Bitcoin. And so again, for a fixed income market where I think real yields are going to have to be negative, bond market's been getting obliterated, capital markets are desperately seeking returns in real terms. And Bitcoin's been a champion of that. And so if we can create the capital markets vehicle that has blue chip credibility, you've got a SoftBank, you've got a Tether, you've got a myself, we've got billions of dollars entering the market. We know exactly what we're doing, but startup upside. Folks that have already built high margin, high growth, high cash flow generating businesses in this space. We know where the opportunities are. We've done it before. We think that's what the capital markets was missing.
Yeah, interesting. I mean, I found it fascinating too because you've introduced some new concepts into the financial, vernacular here. I mean, namely Bitcoin per share, BPS, or something that you've called Bitcoin return rate, or BURR. Explain how these metrics work and how they differ, from traditional earnings per share models. Why not just stick to EPS and NAV?
Yeah, well, because we wanted to signal to the markets that we intend to be judged in Bitcoin terms. This, in our opinion, Bitcoin is the hurdle rate. It is the performance to beat. And one of the reasons we built this vehicle is it's a purpose-built vehicle to outperform Bitcoin. And so EPS, in my personal opinion and the opinion of the business, is it's a highly manipulative metric. Measuring things in dollar terms, I mean, Jeremy, my water bottle has gone up in dollar terms. This microphone's gone up in dollar terms. The dollar is an increasingly devalued currency. And so measuring things in dollar terms doesn't actually get the signal across. How about how much of a currency unit that is finite, that is absolutely scarce? The first time we've ever seen that. How many of those can you get me on a per share basis? Now that is performance. And how can I measure that growth? That's what BRR, it's a funny pun on burr, money printer go burr, but it's Bitcoin return rate. How quickly are you growing the most scarce thing humans have ever conceived on a per share basis? And that's what we want to tell our shareholders is we're going to be performant and accretive in Bitcoin terms, the thing nobody can print, the thing nobody can manipulate. And we don't actually care much about the near term volatility or price action of Bitcoin. It's a low time preference, long-term business is can we accretively grow Bitcoin for our shareholders because we believe it's going to change the world? And if it does, and if we're able to be successful at the metrics we're telling the market to judge us upon, both ourselves and our shareholders are going to be incredibly happy.
Right. Yeah. Let's stick on that theme because, I mean, you're launching with 42,000 Bitcoin, over $500 million in committed capital. That immediately puts you among one of the top Bitcoin treasuries out there. Your goal isn't just to buy and hold, though. You've talked about launching Bitcoin native cash flow products. What's the first revenue generating product that you plan to roll out? What does that look like?
So in our business filing, which I encourage everyone to look at, this is all public documentation. We cited we're first going to roll out educational and content tools. This is even the stuff we're doing right now, Jeremy, which we really appreciate you having us on. And then we've referenced some markets that we're particularly interested in, which is lending, which is credit. I mean, a lot of the vision for the business is in a fixed supply asset class, there's only ever going to be 21 million. If you're one of the top balance sheets in the world with this asset class, it's really who you're going to call when you need Bitcoin, when you need help settling, when you need credit, when you need a loan. And we feel exceptionally capable as technologists that have had prior success in these markets to provide those services. We have a massive balance sheet and ability to make that useful. We're selling Bitcoin financial services is what we wrote in our statement filed publicly. That's making Bitcoin useful, adding to the utility value of Bitcoin. That's where our high level focus is. We've identified some of the markets in our filing. I encourage everyone to take a look, but we consider ourselves not only a firm that's using the capital markets to acquire more Bitcoin in an accretive way, but a financial services firm founded by proven technologists that have been in this industry for over 10 years.
Interesting. Okay, well, let's talk about the cap strategy here, the structure, at least on the capital side. I mean, MicroStrategy has leaned on convertibles and high yield debt to accumulate Bitcoin. Will you follow a similar path? Are you looking at newer, more creative ways to deploy capital here?
I think I know this might not be the answer you're looking for, but it's all of the above. We're going to use what has worked for others, and we think that there's new avenues that we can explore to achieve success for our shareholders. I do think what is really interesting, and I had made reference to it, I want to make sure the listeners understand, when I say real rates negative, that means let's say, the market is giving you a 3% yield, but inflation is running at 5%. You're actually -2 on a real return. You're making the 3% in dollars, but the dollars are getting you less stuff because of inflation. I think that real returns are going to have to be negative on these fixed income instruments. And so our ability to build, products that are effectively Bitcoin backed for some of these markets is really attractive. And the conversations we've had have been phenomenal. Even the 500 million plus of committed capital, that's a big number for a company that's coming to market. And we're coming to market with billions of dollars on the balance sheet. So, we think we can solve a lot of problems for a market that is in desperate need for someone with solutions. Because if you're in fixed income, bonds haven't been great. But maybe a Bitcoin backed bond of sort gives you a lot of real returns. And so some of the conversations I've had is 60-40 the best strategy? What about 55-5-40? What about 60-35-5? And understanding, Bitcoin Sharpe ratio is the best performant of anything you can hold, and what size of your portfolio should it be, but it probably shouldn't be 0. And so anyways, we're looking at everything. We're going to copy a lot of what's worked for those that have helped build the industry. And then there's a lot new that we're excited to unveil.
Okay, speaking of a lot new, there's been some regulatory shift too. I have to ask you, this past week, the Fed and the FDIC rescinded the 2022 letters that required banks to get pre-approval before engaging in the space, in crypto at all, really. It's a major change. I mean, have you already seen renewed interest from major banks? What does that mean, for 21 Capital's funding and custody options here?
Yeah, 100%. I mean, listen, humans naturally are interested in innovation, in growth, in making money. I mean, these are all things I think, Bitcoin's been the best performing asset. It's brand new technology that has innovated and made technological advancements. It's grown businesses and allowed people to outperform. So I think all of these things, naturally, businesses, banks have an interest in. And when you have an administration that's pro-growth, pro-innovation, pro-technology, pro-deregulation. Hey, let's get out of the innovators' way. Let's let them build. I think that's been positive tailwinds for the space. And I would say absolutely, there's been a ton more interest. I mean, yes, Bitcoin spot price is up, but what's really up are those that are contributing to the space, even just from a psychological, philosophical standpoint, those that are allowed to contribute and get to know the industry, that's gone up tenfold from my vantage point.
What about some of the obstacles? I mean, obviously, there was a big change on the bank front, but I mean, are there still some obstacles that remain in place here?
We don't believe so. From a
policy perspective, I guess, right?
I mean, not necessarily, in my opinion. And I don't, I get asked often, like, is this administration the deal breaker that's going to send Bitcoin to the moon? Yeah. Bitcoin to me is not a political trade. If Bitcoin traded based, if I needed Donald Trump to tweet something awesome for Bitcoin to be justified in my portfolio, I'd own none of it. Yeah. Bitcoin is an apolitical instrument. It's been successful no matter what party or who's been in office. And so I think we have what it takes to be successful, which is, in my opinion, the most perfect money ever conceived by humans. It's definitively scarce, infinitely divisible. I can transport it anywhere for no cost. I can store it for no cost. It's 100% public, transparent, auditable, excuse me. So, I mean, it has all the properties that you would need to store your time and energy, to trade globally. Even enemies can trustlessly settle amongst each other with this technology. And so I think for us at 21 and Strike, it's about keeping your head down and just building for tomorrow, because I think humans generally overestimate what could be done in a short amount of time, but underestimate what can be done in a longer amount of time. And I'm focused on the longer amount of time and just day by day, brick by brick, just building the world that I want to be a part of.
Nice. I like it. Okay, well, the Senate is now debating a bipartisan stablecoin bill. I mean, potentially allowing U.S. banks to issue fully backed digital dollars. If that passes, what are your thoughts on stablecoins here, and why do you stick to Bitcoin only?
Well, I don't even find stablecoins as a competitor to Bitcoin, because they're just an iteration of the dollar. I think that stablecoins actually maybe compete with other fiat instruments. My opinion on stablecoins, which is, held personally, I don't think that there's that competitive or that much interest in a local stablecoin. I don't know, like running Strike, none of our US customers asks for stablecoin. Why would they? They have Chase accounts, they have Bank of America accounts, they have Cash App accounts, they have Venmo accounts. All the demand is externally in Latin America, in Africa. And that's what a business like Tether has achieved, to be totally candid with you. So I actually think, and listen, we have Tether integrated into our product at Strike in Africa, in Latin America, these emerging market products that we serve. And what we've seen is the product goes from they want to hold Naira in Bitcoin to they'd rather hold Tether in Bitcoin. So we find Tether actually competitive with the local currency that's a piece of crap in some of these emerging markets, as opposed to being competitive, with Bitcoin. So I actually don't think it matters that much. I don't know why US banks are super eager to try and put a stable coin in my Venmo account. The dollars in my Venmo account are fine. It doesn't matter. It's the person that has Naira and doesn't have digital access to the dollar. They're willing to ditch their Naira for the dollar as they ease into Bitcoin. That's been my personal experience, in my opinion. And for me, it doesn't matter much, to be candid. I'm focused on Bitcoin only because I think it's the best thing for humans to own, given its monetary properties. Okay,
so not competition here, my friend. I mean, because some of the biggest name in traditional finance, Visa, JP Morgan, they're now piloting blockchain-based settlement systems. But is it competition, validation, or both?
I think all of the above. I think people, listen, it's competitive in the sense that inevitably a lot of these big players are going to figure it out. Do I think they have figured it out given the solutions that they're, having mainstream media blog about? No, I don't. Yeah. But it's validating for sure. I mean, listen, the best performing asset in human history, Bitcoin. Some of the biggest, profits per employee, Tether, Strike in the Bitcoin space for sure. So it's growth, it's business. We're clearly solving people's problems out there in the world, and it's the best performant. The last thing I'll say is I think people greatly misunderstand the size and opportunity set of a good money. Humans own a little over $900 trillion worth of stuff, Jeremy. That's real estate, that's equities, that's currencies, that's sovereign debt, that's art, that's precious metals, all the stuff we own. Think of everything you own. About $900 trillion, a little over for humans. Half of that humans use as a savings account. It's what we call monetized the asset. So they own the house not to actually live in it. They're renting it out on Airbnb or whatever. They own the house because they're trying to save the inheritance money they got. Or they own the art because they're trying to persist wealth through time. And so about $400 to $500 trillion worth of value humans have created, and they're just trying to save. They're just trying to store it. They're just trying to exchange it later for the things they need in their life. That's the market Bitcoin is going after, in my opinion. So, of course, every massive institution, every big business is going to try and find their place and extract value of what I think is one of the greatest wealth transfers in human history. And so when people size Bitcoin up against an Amazon or against some other tech stock, Bitcoin is going after an opportunity that is worth $400 to $500 trillion for humans. And I think over time, institutions and governments are going to appreciate and understand that and rightfully try and participate.
Yeah, I mean, it seems like it is. I mean, the sovereigns, there's certainly a lot of talk about them getting involved. And there's also this chatter that the Trump administration is preparing an executive order to explore a U.S. strategic Bitcoin reserve. I mean, how symbolic is this? Do you think it's the start of that serious institutional change that you're talking about here?
Yeah, well, going back to my macro thesis is that we had the post-World War II setup. U.S. is running this deficit. Everyone else is running a trade surplus. That's not sustainable. It's not going to work. It's destroyed the U.S. middle class. It's created this massive wealth gap, bigger than anything we've ever seen in history. And so I think that the Trump administration is trying to unwind that and trying to fix it, support the middle class again. They said Main Street, not Wall Street. One of the ways to do that is to prioritize gold, prioritize Bitcoin, weaken the dollar. And I think that that's what they're doing. Now, the question for the U.S. is it's a bit of an awkward situation is because you structurally run deficits, you don't have a surplus, you don't have profits. Like if you think of the U.S. as a business, they're not a profitable business. So if you're going to buy something new, how are you going to pay for it? I don't think it's politically palatable to print money to buy Bitcoin. And, people in your YouTube comments are going to say, this 12-year-old Bitcoin bro in his empty closet, Trump's printing money to support whatever he does on the weekend. I don't think that's a political supportive move. So I think what they've struggled with is, yes, we understand it's a neutral, scarce asset that could be the world reserve currency or the world reserve asset on balance sheets. We're seeing people like China. China's mining Bitcoin right now. Russia's mining Bitcoin right now. These stories are real. And the U.S. understands the game theory here. But the question is, how do they enter without ruining all political capital that they have? Because the country structurally runs on a deficit. So if you want to buy anything new, you got to print the money and you're going to lose a lot of voters. So I think that's why you've seen Trump say, hey, I love Bitcoin mining. Bitcoin mining is a sneaky way to acquire the asset without bluntly just printing money and buying it. So we'll see if something can get passed through Congress. I think Bitcoin is the most American money we've ever seen. I think the U.S. will find its way to being pro-technology, pro-growth, pro-inclusion, pro-property rights. This is all things Bitcoin represents, and they'll find their way to it, but it's a struggle because if you're a country that structurally runs deficits, well, how do you buy something new like Bitcoin? You're going to tell all your voters you're printing capital, devaluing the dollar to buy us Bitcoiners? I think that's a tough story to sell. That's why we've seen some of the struggle.
So they're not going into Fort Knox and selling gold to do it, Jack?
Well, I think the proposal is actually to revalue the gold and mark it up to its current spot price. And then you can take some of the proceeds and rotate it if you'd like. That to me is very reasonable. It's very logical. And again, one can make the argument Trump tariffed everything except gold, which was very notable and very purposeful. Is he telling China, take your $1 trillion surplus, get it out of the tech stocks because you're killing Main Street. You're causing such asset inflation. The 1% is getting so ungodly rich for doing nothing. And the 99% in this country, we're starting to see, civic unrest. And so is he saying, get your money out of this country, get your money out of the treasuries market, put it into gold, run gold, spot gold up, support Bitcoin? I mean, if you're the US, how much debt and money supply do you is out there before you say, okay, all the dollars are actually backed by gold, are actually backed by Bitcoin. If you can get the Bitcoin and the gold price high enough, Trump can come out and say, all your dollars are actually backed by gold and Bitcoin again. Boom, we solved the problem, right? So I think, I think Trump and Bessent like to see higher gold prices. They like to see higher Bitcoin prices. They are trying to devalue the dollar. It's the only way out is by printing your way through and devaluing the debt.
All right, you're the CEO of two companies, my friend. I don't know how you did some days, but how do you manage your time between Strike and 21 Capital?
I think, this story is a little over exaggerated. These businesses do share in one mission, which is, Bitcoin. And so my time, it's effortless to manage my time. I mean, they are two separate companies. They work on two separate products, entirely separate entities. But I've spent my entire life working on Bitcoin. I don't know a life outside of that. And so it comes really naturally to me, to be totally honest. I do believe that Bitcoin is the best tool to affect positive change and move the world in what I hope is the right direction. And so it comes naturally to me. And the other thing I would tell the public is, you can just do things. I don't know who came up with the rule that you can't run two companies, but it's not true. And I'm proof of that. So when I was presented the opportunity and we were around the campfire and it was like, hey, let's start a new thing that we think the world needs and is going to advance the world in the right direction, I was like, why the hell not? Who am I to tell myself I can't? So
I like it. Okay, let's finish with the lightning round. I know you're a busy guy. Short answers if you can. What's the biggest execution risk for 21 Capital in the next 12 months?
Getting distracted. Again, I think people overestimate what they can do tomorrow, underestimate what they can do in a year. So for us, it's keep your head down, make progress each day. You'll be surprised when you look back how much you've accomplished.
Okay, I like it. One piece of advice you'd give Michael Saylor today?
Except my chess match. Supposedly he's a chess player. He won't play me in chess. So I don't know. Let's study some chess openings together, Saylor.
And when you wake up every morning, what's that one Bitcoin metric that you check?
I like tracking Bitcoin against gold and oil.
Okay.
I think anything measured in dollars will go up over time. I think the real world reserve asset competition is between Bitcoin and gold.
All right. Jack Mahler's, of course, CEO of Strike Bitcoin payment platform and now the CEO of 21 Capital. It's great to have you back on Kitcoin. Back on Kitcoin. Those two things go together, Jack, but back on Kitcoin. I appreciate it.
You guys are the best. Thanks for having me, man.
Thanks, Jack. Appreciate it. And of course, to our viewers, what do you think? Would you hold stock in a company that grows your Bitcoin per share? Let us know in the comments. Be sure to hit the subscribe button. I'm Jeremy Szafron. We'll see you next time.